Hi everyone, let's analyze TTk Healthcare. It's part of the TTK group. Uh, got listed in 15, nothing meaningful. It's below its IPO price. What's happening? So, how far below is it from its all time high? Went down up to 80%, currently at 59-60%. Okay, cool. So, what got me interested? This over here suddenly popped above the 50-day and then very high volume. If you look at the volume here, this volume is you know first of all, it's a very thin stock. Only 1,000, 2,000, 10,000 stocks traded, so you have to be a bit careful. This pop was on a volume some 300-400%, 1,000% volume, this as well. So yes, think there is some sort of accumulation happening here in the stock. Some probably, you know, somebody must have bought some stock. Could be. Okay. So what's the analysis here? So if you see, uh, the bottoming out process is pretty much in place. It's bottoming out. This is usually how it bottoms out. It forms this sort of a C, sort of a cup, sort of a, you know, setup. It, this is the bottoming out process technically. Now, what's happening? If you'll see, on weekly basis, there are spikes on very high volume, and then the down days are on very low volume. So that's very encouraging. Same thing has happened here. And this volume is extremely meaningful, hence it got me interested. And what am I going to do? So I'm going to be buying between this range, 620, 560. This is the range that I will be buying it in, 10% range. What is going to be my stop loss if it closes below the 200 day on a weekly, 2 weekly basis? If it goes below 200 day and continues to trade below 200 day, 2 3 weeks continuously, I will be out. Volume action will be important to look if it breaks below the 200 day. If it, if the volume is not substantial, I will stick around. My stop losses are very dynamic, guys. I don't keep a specific stop loss because markets are not specific. They don't work on any geometry or numbers or any algorithms. Markets are dynamic. They work on people's emotions, and people's emotions cannot be quantified in numbers or theories or algorithms. No matter what people tell you, there is no algorithm that can quantify this. So yeah, so stop losses always dynamic, always based upon how the stock is moving. What if the stock breaks down, 20% and it starts trading below 200 day? I might just get out, if the volume is very high. So again, it's all dynamic. It depends on how the stock is moving. Currently 50 sideways, obviously, because the stock has been sideways, and 200 days trending upward. So that's the saving grace. Now, can we expect a straight up pop? No, probably this might consolidate further. It's a very low volume stock, so it might consolidate further. But I'm liking it. I think it can give good returns from here. Let's look at the fundamentals. Only 20% of the stock is out to trade, so that is good. They have 20 crores of cash flow, very good, and cash flow has been very stable. 20 crores of loan, not much. They've shaved off the loan, brought it down by 50%. Okay, there has been no dilution in equity, very good. Profit and loss, highest profit. Sales have been rising, very encouraging. The only problem here is their margins have gone down, so we don't know what's happening on that front. Okay, very small company, 500, 600 crores of sales, 20, 30 crores of profit. So expect volatility in this. You can't expect this. It's not a secular uptrend, secular growth company. So you have to be ready for volatility. Overall, numbers are great this year, and I'll show you something very interesting. If you see the median PE for the stock is 33, and currently the stock is trading at a PE of 29. So it's trading at a good. It's a bit undervalued. according to me. And if you see, since last year, the EPS has gone from 12 to 20 this year. So the EPS has risen, and the stock has not given any meaningful return. So we can expect the stock to go up. Another reason for the PE to come down is also that the EPS is rising, and the more EPS rises, the more PE is going to go down, because PE is what, it's price into earnings. So if earnings are growing, PE will be low. So either a PE re-rating happens in this stock, which pushes it higher, but a P rating can only happen if analysts are tracking this. And I doubt any analysts are tracking this stock. Let me just quickly check if, see, no, none of the analysts are tracking this stock. The EPS is due on the 27th, so keep a check on that. So what can we expect? What can happen? P re-rating can happen, or probably some fund or something, or some investor buys this stock thinking, yes, it's pretty undervalued, and then we can see some meaningful return. So it can't be a trade. It can be sort of a short-term investment for 6 7 months or so. We can export kind of returns can we expect. So if you see, this is how I try and figure out what can be expected in terms of returns. If I look at the profit and loss, this stock got listed in 15. Okay, so since 2015, the profits have doubled. Sales have gone up by 100 crores, which is roughly 30%. Where has the stock gone? Nowhere. It is probably trading below its IPO price. Let's quickly check what was the IPO offering. Just a moment, just bear with me, guys. Going to quickly check what was the IPO offering. So TTk. Hmm. Okay, sorry guys, the information is not on this website. So if even if we consider post listing price, the stock is trading 42% below its post listing price, and in 2016 it was making 16 crores. Today it is making 37 crores. My guess is that this stock should be valued at 2000 rupees at a bare minimum, because at 2016, if the stock was making 16 crores and now it is making 37 crores, we should expect the stock, based upon just pure earnings, it should be up 100% from here, which is not the case. So it is down 40%. So 100% from here is roughly 2000. 2000 from here it is 2000. So if we are buying here, I think we can expect returns of around 200%, at least 200% returns from here. You'll have to keep it. It's not going to happen overnight, but this is how I look at it. Yep. Yes, guys. Thank you.